Anil Manghnani joins in as well to talk about the technicals. Anil, morning. We've got as far as here on the index. How much more would you give it in a pullback?
See, having held that 5200, 5150 range, the market has given a nice pullback. I think a lot of it is because of probably lack of conviction, and that's why it keeps on pulling up till more and more people get sucked into it. My gut feeling is we are very close to a major resistance zone where again we should start our way back down. 5560 to 5620 range is where I think this market should stop and then start to retrace. The retracement actually is the key. I mean, where it retraces to would actually give you an indication whether the bottom is in place at 5177. My feeling is if we head back closer to 5300, if we hold there, then I would like to stick out my neck and say 5177 is the bottom, or at least temporary bottom. But if we start to break that and go back to 5200, then I think we'll have to reevaluate at that time. So I think the pullback is more or less up. I would guess we are more or less at the upper end of the band, and now I'd look to probably at least sell some of the weaker sectors, if not open shorts.
Morning, Anil. What if 5620 gets taken out in this run and we get to 5700? How would you approach trading and your view about the market then?
No, I think my view will be the same. I think anything in excess of 5600, even if it stretches like you're saying to 57, for me that would be a sell zone right now. I think the market is a little stretched. Yes, we had a lot of short covering, but I think at this level, if you haven't bought at 5200 to try to go out and buy at 56, 57 doesn't make sense. So I think anything above 56, even if it stretches, I would look to sell and open shorts.
Anil, there's been steady accumulation on banks as a sector. I mean, the correction started there. Over there, are you beginning to see any basing patterns, any consolidation patterns?
I think you'd have to look at the PSU banks for a simple reason. If you compare point to point, you take the credit policy day, which the index touched about 5800, when many of the banks rallied and then with the rest of the market corrected. You take a high of Bank of Baroda on that day was 892. Today it's 920 when the index is at 5550. So already it's above a price on that day, and the index is actually 250 points lower. Even I think you take a State Bank was 2737 that day. It's much higher than that. A Federal Bank is back to those levels. So the PSU banks clearly are outperforming the index when you compare point to point. But if I move on to the private sector bank, I don't see the similarities. So I think yes, as a relative outperformer, or if the market were to correct, I find that they would correct less would be the PSU banks. But I think private sector have hit some key levels. 1067 on ICICI Bank is a Fibonacci resistance, so I'd look to sell that. And Axis Bank 1320 to 1340 is a stiff resistance, and HDFC Bank at 2190 is a resistance. So I think even Kotak for that matter has risen from 333 all the way to 413 or so. So I think around 420, 430 is a major resistance. If I had to pick, I'd sell the private banks at these levels. Maybe PSU, like I said, relative outperformance should be there. I wouldn't mind holding on to that.
Talking of opening shorts, Anil, you would be short on some of the infrastructure names like Lanco and GMR now after their pullback?
Yeah, I think in any market, if you are trying to short, first you short the weakest sectors, and the sector that really broke down in this collapse was infrastructure. And even if you compare from the lowest point, a 30 rupee Lanco has gone to 42, that's over 35%. Even a GMR from sub 30 is at 40 plus. So these have all risen 35% in the last week and a half. So I think they become shorts now. Both of them, I think Lanco and GMR in the range of 41 to 44. I'd look to open shorts. I think they'll be headed back to 35 levels.
Medium term, what about the Nifty? Where is it headed, or where would you even set the boundaries for it? Medium term.
On a lighter note, let's go back to 955 so I can play golf in the morning. That would be the best case scenario.
I hear you, Anil. You have my vote.
I think I think the key is that one step at a time. Sometimes it's difficult to predict where this market is going to stop on either direction. I'm sure when we came to 5200, 5150, at that time there were enough calls for 4800, 4600. So I think sometimes emotions takes over, and then suddenly when the market bounces back, then everybody gets bullish at a much higher level. So I think this problem of getting in much higher and trying to sell much lower is got to stop. I think otherwise you can't make money. You got to take out emotion. I think people get carried away when it starts to fall sharply or when it bounces up. The market needs to form a base. If it was a typical bull market correction of 30% in the index, which is fast normally in India, and then a pullback, I'd say yes, it doesn't need to go and retest the lows. But even though the index corrected 17% this time, the way mid caps and small caps have fallen, in excess of 60, 70, you take a Punj Lloyd that went back to the 2008 lows, or an Arcom that went 40% below 2008 lows. When those kind of falls happen, the market needs to form a base. It just cannot bounce and run away. Otherwise, then the bounce is not sustainable. So I think we should start to correct from this 5600 mark. My best case scenario is we stop at 53, make a higher bottom if you compare 5177, and then start to make a base for a move higher. However, if it breaks down below 5300, then we can start evaluating whether we are headed to 48 or no. So I think we want the bottom to be made too fast and get away with it, but that doesn't hold the market. The market needs to spend time at a particular range. We keep talking about ranges every day, and then we adjust the ranges higher or lower. I don't think that's viable. I think we need to go back to 5300, spend some time there, then I think the market will sustain. Just short covering rallies or gap ups don't help in a market that has seen such a vicious fall. So I think the market take a pause here, go back lower, spend some time there, confirm that the bottom is in place, then I think you'll have a more steady market. Otherwise, I think some more volatility is still to come.
Anil, technically speaking, would you bet on the weaker segments of the market like infrastructure, real estate, ADAG forming new lows over the next few months from even below the lows that they formed sometime last week?
Maybe, but I think a retest for sure, because take an example, two small examples would be Punj Lloyd and I think it's Unitech. If you remember in November or December, I don't know, there was one crazy day where we had stocks falling 15, 20, 30% and recovering immediately. I think a Punj Lloyd touched 79 in a freak trade and then closed at above 90, and similarly I think that day Unitech touched 46 and closed at 61. Most people came out and said that's the bottom, that was the level to buy. Yes, it held out for a couple of months, but I think after 2 or 3 months we've seen both Punj Lloyd has broken 79 and even Unitech broke 46. So I think these kind of savage bottoms normally get retested. Classic example would be your Sensex also in 2008 October. It touched that freak level of 7657, closed at 8500. It had the sharp rally, came back in December, tested it. It again bounced back again in March 2009 lows. It tested it. So when stocks or indexes are in bear markets, so maybe the Sensex yes is not in a bear market, but many of these infrastructure stocks are. They normally test those levels 2-3 times over a period of 6 months before they actually bottom out. So I think more or less they would retest, if not break, at some point of time.